everyone. FinanceFeeds is here in sunny Limassol, Cyprus. We're at the third annual FinTech Unplugged event, and I'm joined now by Konstantin Shulga, who is co-founder and CEO of Finery Markets. Konstantin, thanks for having us again at your lovely event.
Yeah, Nikolai, always great to have you. You know, Finery Markets is celebrating 6 years being live this year.
Oh, nice.
And it's our third event here in Cyprus, where we are headquartered. Even though we serve clients from more than 40 countries, but Cyprus is the most important place for us to gather with all of our important partners. And yeah, great to have you here.
Great. What are you looking most forward to this year at this event?
So this year in particular, since our network is ever growing, we want to have all of our partners to meet with each other. So there are more synergies between our liquidity providers, banking partners, brokers, and payment companies to actually benefit from the network. And it's not just about Finery Markets, it's about all of our partners trying to build the business together and grow the network.
Mm-hmm. Great. I think today's discussion for us is very focused on stablecoins.
Yeah.
And I wanted to start out by saying, I think we all agree it's a very dominant topic in digital assets today. But I wanted to ask, from your perspective, what are the crucial sort of market forces that are that serve as the primary drivers for stablecoins or could drive stablecoins to reach their full potential? Besides the fact that they are sort of inherently stable, right? Because obviously we call them stablecoins. And how do you think we will achieve widespread adoption of these assets?
Yeah, so let me take a step back. So for many years, we were putting all the different crypto use cases into three buckets. The first one, which is more of a retail speculative part, which still takes a lot of attention because everyone wants to do some gambling. But it's not our focus.
Sure.
There's a second part, which is about institutional adoption and also diversifying from, basically just diversifying from gold into other digital gold. And with the adoption of ETFs, we see that market segment growing over the last few years.
Yeah.
And most importantly, the third bucket is the actual real-world use case where stablecoins played the most important role. The payments, the money remittance, and everything related to actually movement of the funds, whether it's cross-border or international. That's exactly the main driving force. So we see with more adopters from the banks, from the large players like Visa. So over the last couple of years, Visa already started to accept stable coins as a mean of settlement with their acquired banks and merchants.
Yeah.
So these are the most important drivers, and we'll definitely just see even way more use cases with local merchants, local banks, and local payment trails benefiting from efficient stablecoin infrastructure.
Great. And if we talk about, your client network specifically, what trends are you observing regarding, the growth in demand for stablecoins, and what's driving the rise in this demand?
I think the key trends first is regulation changes the focus. We are here in Europe where as of the last month, so couple of months, the USDT is no longer widely acceptable because of the regulation. So Tether decided they will be pulling off Europe. So now we see a lot of the shift from Tether to Circle and some of the local players. And that trend will be declining within the next couple of years. We believe that there will be more local players trying to enter the space. There will probably be more M&As. And local banks will also try to issue local stable coins. That's exactly what we see in Europe with Societe Generale, with Deutsche Bank. Okay, all of them are trying to issue their stable coins. And that's great for the market. It just raises awareness and adoption of the crypto.
Sort of like a diversification of stable coins across many different players, the traditional fiat banks, something like that.
And it has its drawbacks. And I think we can touch on that later on. But one of the most important challenges that appear in the market is we now have not only just one US dollar or euro stable coins. We can now have 5 different, 10 different, 20 different US dollar stable coin issuers. And if we were thinking and the entire industry was perceiving FX as the most fragmented asset class, now we have crypto as the most fragmented. But within the crypto, we can have stable coins And that's where we see the most fragmented use cases out there with different issuers, with different blockchain layers on top of that. So that's very fascinating.
So there's many different blockchain networks today, right? I want to ask, from your perspective, what are the most significant infrastructure gaps that still exist today in the stablecoin market and are kind of holding back the truly deep institutional adoption that we really need, right, for stablecoins to become?
For sure. So I think where we see right now is the market is maturing. And all the initial issues already been solved, like the regulatory part. We're filming that. Literally, like yesterday, the Genius Act was passed by Congress in the US, which will massively impact the stablecoin space. So all the regulatory issues are pretty much solved.
Yeah.
The primary markets for minting and burning, I think that's already established. What we need as a next step to scale that infrastructure is we need secondary markets where one stablecoin can be easily exchanged against another stablecoin or fiat or any other crypto asset. And that, I believe, will be the most important challenge into the space. And that's where Finery Markets steps in and helps bridge all those gaps with liquidity and secondary markets fragmentation.
I see. Interesting. And if we talk about, or if we go beyond simple payments, which really stablecoins are used for today, what other use cases as a financial product do you see stablecoins becoming, to really become completely institutionalized, like we said, like we wanted to go global, that maybe today that usability for stablecoins is limited. Let's say, again, from either settlement infrastructure, blockchain perspective.
I'll give you probably like one example besides the most common just crypto processing companies that allow merchants to accept crypto as the mean of payment. But one of the beautiful use cases that I see in the market, which I really love, is where imagine yourself having a crypto wallet and also the bank, which are currently like completely separate institutions.
Yeah.
But today, there are already some solutions on the market that allow you to combine both your crypto holdings and your on-chain holdings together with the fiat, where you can send the fiat to your bank, and at the same time, immediately, you can have a local stablecoin issued just while replicating the same exact fiat. And if you can transfer that, you can send it to your friend, you can pay with that, and that's a seamless experience where you can transact in the off-chain space and the on-chain within the same counterparty or with the same solution. That I believe will be major driver for the mass retail adoption, and most of the banks will do the exact same user experience. And once again, they will need the secondary liquidity as well to allow those stable coins be fully fungible with all the other stables and fiats.
I have a follow-up question though, because when I think about regulation and the fragmentation of regulation that's been the case over the last, I would say, probably 5 years, do you think that soon we'll get to a place where, again, if we talk about the US, if we talk about Europe, right, MiCA, and let's say we talk about Asia, Hong Kong, some other jurisdictions that are basically, essentially, either launching or have launched regulatory regimes, are they all going to be uniform and universal in the sense that, okay, so if I take my phone and let's say I'm using, if I can use an example, I don't know if SoFi in the US includes a digital asset product within the fiat product, let's say, right?
Yep.
But let's say they do. But then if we go to Asia, maybe the regs will be different, and essentially the fiat and the crypto still have to be split for a certain period of time before they're allowed to merge.
100%. Like, that's the challenge for the industry, is that even though crypto is global by its nature, regulation is quite different. Like one of the biggest examples is European Union with MiCA that does not allow large stablecoin issuers like Tether to operate unless they keep all their funds and like proceeds within the European banking system. So that by itself creates some friction, so that you need to have not only the primary infrastructure, you need to have efficient bridges, which will operate not in the like DeFi on-chain sense as a bridge, but as an off-chain between different jurisdictions, between just different regulatory regimes, And that's a massive challenge that the industry would face in order not to just operate locally, but to operate globally. And so, yeah, it's exciting times, but it's a fair point. Like the regulation will be quite different.
Maybe. I guess to kind of wrap things up, I wanted to ask specifically how Finery Markets is it addressing some of this fragmentation, challenges with liquidity, operational challenges that stablecoins face today, and really kind of how are you helping to scale or to meet institutional demand that obviously will increase over time?
So from day one, Finery Markets' focus was on the payment companies and some real-world use cases where the payment companies and banks and OTC desks can easily hedge their crypto to fiat exposure. Our network right now has more than 150 active participants from 40 different countries, including payment companies. And what they do is they can easily exchange crypto to more than 20 different fiats, settle locally, and that's where we help them scale. And right now we are launching our dedicated product for stablecoin issuers that want not only to create their mint and burn workflow, but to scale their stablecoins globally with secondary liquid markets. And because today, if you're a stablecoin issuer, you can go and list on exchanges, and that's a very lengthy process. It's a very unclear, uncertain process. You still need to find a market maker. So you need to solve all those different bits and pieces, and you're still exposed to the risk of some market maker cooling off, and then your stablecoin can be depacked. So lots of risks are there, and our product is there to solve most of those issues. So any issuer can rely on our network of market makers, can rely on our network of payment companies that can already instantly adopt that coin. And because of the nature of our private room trading technology, the risk of the coin being depacked is also minimized. So I think that's just the most advanced product today on the entire market globally for someone willing to scale their stablecoin liquidity. So yeah, we're very happy to launch that product.
Very, very cool. Very, very cool. There's, I guess, a last follow-up question.
Sure.
Is, in the retail, or not in the retail, but in the traditional Forex space, some liquidity providers have launched what they call pair CFDs. So essentially, they're pairing financial instruments that were traditionally always separate, right? Let's say gold, platinum, palladium versus equities, right? Individual equity contracts and all these different things. And now they're pairing things like you can basically trade gold versus oil, right? Or, I don't know, Tesla versus the VIX, right? You can essentially come up with any kind of, I would call it a synthetic financial instrument. Does Finery Markets do anything like that today with, let's say, companies or liquidity providers that are in that traditional CFD space where they're looking for, again, creating a synthetic or financial instrument where you could take, let's say, Bitcoin, right? Or you can take some other prominent, let's say, cryptocurrency that's volatile and peg it against something else, which might be in the traditional market, like gold, for example, and let people trade.
So this is also part of what we do within Finery Markets ecosystem. We allow, if we talk about stablecoins, once again, we allow stablecoin issuers to provide their clients with trading not just against, let's say, local fiat currency against the local stablecoin, but also market makers on Finery Markets can support their local stablecoin against Bitcoin, Ethereum, and whatever else you want. It's already there. And it's way easier to construct. It's literally a few clicks to create the pair. And then the market maker can support that as long as you have certain demand. We are there to help you with the supply for that.
Great. Awesome. Yeah. Very cool. Lots of different things to come. Hopefully it'll be a 4th annual and a 5th annual FinTech Unplugged, and we'll kind of see where this goes. Because stable coins and crypto are here to stay. So
that's 100%. The entire industry will be migrating its old payment rails into a more efficient stablecoin industry. That's for granted. And yeah, we are here to help.
Great. Also, well, Konstantin, thanks for taking the time, here at the event to spend a few minutes with us. Always a pleasure getting your insights, and we wish you the best of luck. Congrats on the anniversary this year.
Thank you.
And yeah, we'll see you soon.
Nikolai, yeah, it's always a pleasure.
Likewise. Thank you so much.